Hey, good morning, guys. Good morning. What's going on? I hope you guys are having a wonderful day. My name is Dr. Boyce Watkins, and today on the Black Financial Channel, I'm going to talk about Warren Buffett. Warren Buffett said some things that really, to me, came off as a little bit of a warning about American banks and the things you might want to pay attention to. Warren Buffett actually has substantially reduced his investment in banks over the last few months, and I think it's worth talking about. So get comfortable, buckle up your seatbelt. We're going to get started on the Black Financial Channel right now. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I am your friendly neighborhood finance professor. On the Black Financial Channel, we believe in Black wealth and Black education. We believe in preparing our kids for the future. We break generational curses, and we have already closed the racial wealth gap. Most of you, by the way, that follow this platform, most of you that are part of the Black Business School, you actually invest more than white people do. Many of you invest as much as rich people do, which means that in a generation, your kids are going to be rich. So I want to applaud you for being the economic leaders of the Black community. I was thinking about the All Black National Convention, which is happening in the fall in Atlanta. And one of the things I found was there's a psychological study that says that 80% of all people do not have the ability to defy authority. 80% of all people follow the crowd no matter what. 80% of all people do what they are told, even if the instructions that they're being given are bad instructions because they don't have the courage or the intelligence to defy that order. Well, I said, you know what? I'm looking for that top 20%. I'm looking for that 20% of people that are ready to break the generational curses. I'm looking for the 20% who aren't trying to follow the crowd. I'm looking for the 20% that want to do something better. I'm looking for the 20% that are willing to walk away from destructive systems. I'm looking for the 20% that are okay with educating their kids and building wealth and getting off the corporate plantation. I'm looking for the 20% that want to do things different. So if you're in that 20%, then I applaud you. Put a B1 in the chat. That's where we need to be if we want to be successful. Now, with that being said, you don't have a lot of time. I don't have a lot of time, so we're going to make this quick. Hit the thumbs up button, thumbs up, share, subscribe. So today I was thinking about Warren Buffett, and Warren Buffett issued kind of what I thought was a warning about banks. He didn't say all the banks were bad. He didn't say that the American economic system is going to crumble. He didn't say any of those things. So let's not make this into a conspiracy theory conversation. But what he did say is that some of these banks engage in very shady, problematic, borderline fraudulent practices as it pertains to how they report their income, how they report their earnings and report their wealth. And so if you look at this chart right here, and if you're on Instagram, you can't see the chart, but I'll describe it to you. It shows that Buffett's investments in banks have been declining substantially over the last few years. Buffett, who's an avid investor, he invests, billions and billions of dollars. I think he's sitting on maybe a couple $100 billion in cash. And if you notice, Buffett has been substantially reducing his overall investments in bank stocks. I mean, there's a Bank of America, BNY Mellon, U.S. Bank Corp, stuff like that. So Buffett still invests, billions of dollars in banks. So he hasn't lost faith in all banks. But he said that a lot of the banks are engaged in very bad accounting. And I'm going to explain to you what he's referring to in 1 second. So basically, there's two key problems that he pointed out. And I agree with this. This is what happened when you're talking about Silicon Valley Bank, or when you're talking about what happened with Signature Bank, or you're talking about some of these other banks that have gone belly up, is that two things are occurring. One, when they report their books, they are reporting the value of their investments based on the cost of the investment and not the value of the investment, right? That's a big deal, right? So let's say that I invest your money in something and it costs me $100,000, but the value drops to $60,000. Well, if I put $100,000 on my books to represent the value of my investment, I'm lying. I'm lying. It's like somebody going on a dating app and showing you a picture of what they looked like 15, 20 years ago. If you fall for that picture, you got catfished. That happened to me one time, a long time ago when I was much younger. I was on a date nap, and there was a lady who used a picture that was 10 years old. And I saw the picture, then I saw the lady. I said, these two don't match. These two are not the same. You are a liar, ma'am. And so this is what goes on with some of these banks is for some reason they're able to get away with providing accounting where they list things at cost and not at market value, which is incredibly problematic. The second challenge that that you have is what they call duration mismatch. Duration mismatch is where your assets and your liabilities don't match. And what do I mean by that? It's real simple. Basically, if I'm taking money in my right hand from depositors, and depositors are giving me their money, and they could take their money out at any moment, that means that those are short duration assets. They could take their money out tomorrow, and it could be, and it could be gone very quickly. And then I take that money and I invest in something like 10-year government bonds that don't expire for another 10 years. Well, there's a duration mismatch. I have taken a short-term asset and put it into a short-term liability and put it into a long-term asset. So that means that if these people on this side show up one day and say, "Hey, I want my money back," I can't get them their money back because I've got your money locked up in something else, right? So basically, there are three types of risks that tend to pop up when you're talking about duration. One is what they call interest rate risk, which is the risk that interest rates are going to change, which will affect the value of your assets. That's what they got hit with. When the Fed increased interest rates, it killed the value of those long-term government bonds. That's why Silicon Valley Bank does not exist anymore. Then there's also what they call liquidity risk, which is that you put your money into something that's not liquid, that can't be easily sold, and people pop up and get their money back. I wonder if this might have been the challenge. I got to ask Jay Morrison if this is kind of what the challenge was with the Tulsa Fund, where people put their money in and they wanted their money back quickly. But the thing is, real estate is not a liquid investment. Real estate is something that takes time to sell. Real estate is something that may go into a dip and then come back up 3, 4, 5 years later. So it's hard to kind of have the liquidity all the time to be able to just pull your money out and give the money back. So typically, if you ever collect money or if you ever get into a situation where you are investing other people's resources, make sure you have an understanding about how long you have to get things together. If somebody invests with you and they say, I might need my money back in 2 weeks, you might want to say, no, 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 no. If you don't want to invest for at least a year, then don't do it because it may take time. Things may go bad. There may be some adjustments that need to be made. I know some of y'all have mixed opinions about Tulsa and Jay Morris and all that, but I'm gonna say this: I've been to the Black House many times. If you haven't visited the Black House in Atlanta, you got to visit. It is the best place for Black people that I have seen in this country anywhere. That's why me and my wife put an office in the Black House. We had the office for 2 years, and we did that to show support for the Black House. And so anybody who has an issue with that, I encourage you to go build something better, and I will talk about you too. So again, you mixed opinions. I know, I acknowledge that, but at the same time, I'm going to say that I love going to the Black House. That's what I'll say. All right. So the third type of issue you run into with duration or with duration mismatch is what they call credit risk. Credit risk is that if you have to refinance in order to maintain an investment that you already have, well, if the credit market goes bad and you can't go get that loan that you need, then you'll be in big trouble. Access to capital is really important for businesses. Some businesses in tough economic times, like the ones we're going into, where you have a credit crunch, it is extremely difficult for them to get the money that they need to stay alive. So basically, that's another risk that you run into also. So what Warren Buffett is basically saying, I'm going to summarize it for you real quick. If you're confused, don't be confused for long. This is going to be easy. Basically, he said that banks are just not really being honest about where they really stand. The transparency isn't there in a way that makes him feel comfortable. He actually sold a ton of shares in a few different banks. I'll give you the banks that he sold, and then I'll give you the banks that he actually added to his portfolio. JP Morgan, he sold JP Morgan, Goldman Sachs, Wells Fargo, M&T Bank, PNC, BNY Mellon. He dropped his position by 69%, and US Bank. Those are the ones that he cut down or got rid of altogether, but he did increase his investments in Citigroup, Ally Financial, Jefferies, Nubank, Bank of America, and his bank stock investments overall have dropped by about 49%, from 75 billion to 39 billion. So he's still invested in banks. He still has 39 billion in banks. He hasn't walked away and in some belief that the banking system's going to die forever. He just reduced his exposure to banks because he saw some legitimate issues, some red flags as he described them, and those red flags are real. They're very, very real. Now, I want to warn everybody real quick. Big warning, very important. There are fake Boyce Watkins accounts everywhere. They even come into the live stream and they ask people like Edward Williams. There's a guy in here that I do not know who's asking you to inbox me. He says, inbox me, fam. I don't even talk like that. Inbox me, fam. That's what they do. That's how the scammers operate. So if you ever get a private message from somebody who is pretending to be me, just know that it's not me, and they're going to ask you for your money, and I don't want them to hurt you. So please, please, please report those accounts and tell that person, give them the middle finger, and do not engage with those individuals. Or if you want to just have fun with it, engage with them, and then at the end, like after they think you're going to give them your money, just tell them I'm gonna call the cops on you. All right. So what about the Apple savings account? I think that that's good. I like the way it integrates with your Apple Wallet. I think it's a big move by Apple. I think Apple's going to be one of the biggest banking players in the country. Again, I recommend in my view, not even recommend. This is not investment advice. This is what I do. I don't put all my money in one place. So even if I like something, I still spread my money out, and I think that's an important rule of investing. Now, really quickly, a couple of things. Number one, I'll be in Houston this weekend, the 21st and 22nd for Black Wealth Boot Camp. If you live in Houston, feel free to roll through. Go to boycewatkins.com if you'd like to learn more about the Black Wealth Boot Camp. Number two, we are offering real estate certifications now in the Black Business School for beginners. So if you are a beginner that wants to get started in real estate, we have a program called Real Estate 101 that we spent time putting together. You're going to like it. It's got self-study exams that you can take and a certificate you can get when you're done. So if you're interested, just go to boycewatkins.com and you can take a look at that. And also, last but not least, anybody who wants to advertise on this platform, if you have a Black-owned business, we reach 1 million Black people a week. Feel free to hit up drboycefinance.com. You reach out. This nice lady named Micah who will take good care of you. So if you have a Black-owned business, you want me to shout you out, just go to drboycefinance.com. You support us, we'll support you. We want to see you win. All right, guys, I'm out of here. Have a good day. God bless you. Hit the thumbs up button on your way out, and I will talk to you soon. Take care. Peace.